course. And Capitec is next. Remember, more than 6 million retail customers nowadays, established back in 2001, listed on the JSE. Nobody gave them half a chance because all the A2 banks were falling over, and boom, look at where they are now. 74.9 billion rands worth of market cap. Certainly part of the big six now, if you'd have to put it that way, maybe even the big five in terms of retail presence. Price earnings ratio 21.37, very high for a bank globally, where they typically trade on much lower margins. Dividend yield 1.74%. I guess it's beginning to be a dividend distributor. Share price chart, let's look at it. Above 650 rands a share. Incredible performance, and that's right through everything that affected African Bank and everything that has affected everybody else in the sector. But can they hold it? What do you think?
Yeah, so they've really proved that you can make money, and a lot of money, from the underbanked. And I think what cleverly they did was, typically those members of the community, they haven't been well serviced. They've been lending customers, so that was their sort of entry point. And they do have a significant lending book still, but on the back of that, introduced transactional banking with a very low-cost branch model, and now they're looking to diversify their revenues even further. Introduction of a credit card, and they're talking about introduction of insurance early next year as well.
When you say introducing a credit card, how does it work currently? You just have basically a debit card, a bank card.
That's right, yeah. So I guess the distinction is, yes, there's credit attached to a credit card. And it's
but normally if they
flexible.
give you a loan, they would actually tank up your account with the available amount.
That's right.
Okay, but in any event, as you say, it's still a very profitable and substantial loan book, but somehow they've managed to avoid getting into the bad debt problems that affected some of their competitors, maybe even benefited from some of their competitors going to the wall.
Yes, I agree.
And now the transactional model, and as far as fintech's concerned, because they launched later, they don't have all this 1970s mainframe crap happening in the background. All they've got is like new systems that operates in a nice online app.
Yeah, and again, their ROE is at 26%, so that's reflective of leveraging technology.
But somebody mentioned on one of these shows that they are like the most expensive bank in the whole world by comparison to like
valuation,
price to earnings ratios and stuff.
And
I don't know if that's correct. There's probably another one somewhere.
But yeah, I think it's reflective of the sort of growth expectations. But I guess the point is, traditional banking and maybe new age banking are different, where you're going to be valued on your ability to generate earnings as opposed to your
capital like Discovery
base.
Is perceived in the insurance sector. They can deliver higher growth.
That's right.
Okay, so hot or not, even at these elevated levels?
So your point about
strong
valuation.
Supporter base. I mean, it's held by fans more than by shareholders, this company.
I think there are new entrants. They're seeing the potential for this market. They've proved it, essentially. And with the low-cost model, I think some of the other big banks, First Rand, the others, are much more reasonably priced. So I'm going to say not hot because the other alternatives.
Okay, well, look, we've oscillated on this one over the years, but I'm going to give them the benefit of the doubt and say hot, because the management team continues just to rail forward and surprise positively all the time.